So what can SRS invest in? Predominantly, there is quite a wide spectrum. And in fact, this is one of the things that is also very different from the CPF investment scheme. The types of investment products that are approved for SRS investment is quite a lot. And it includes things like shares, loan stocks, unit trusts, fixed deposits, fund management accounts, Singapore government securities, state bonds, gold, Singapore premium life insurance products, and what is not around, you could not invest in direct properties, critical illness, healthcare, or long-term care insurance products, and all proceeds from the realization of SRS investment must return to the SRS account. So a very similar structure like your CPF-IS investment scheme. So those who have a CPF-IS investment account will know that when you invest using that account, like the SRS investment account, when you liquidate it or when you take profit on any security, the money will return back to your SRS account. It will not return it back to your personal saving account, right? So let me give some illustration just to clarify the rules. So we know that we effect from year of assessment 2003, all taxpayers are not subject to tax on their first 20,000 of income. So zero tax rate income band, you can enjoy for this level, and retiree enjoy this tax exemption for their SRS withdrawal, and only 50% of SRS withdrawal is subject to tax. So if you look at this, this is the tax structure table that I've taken from IRAS. If your annual income, assessable income up to 20,000 is 0%. And if it's between 20 to 30,000, 2%. And 30,000 to 40,000, 3.5. And why I draw a line across at the point that separate 40,000 to 40,000 to 80,000, you notice that's the part that has got a 100% multiple, right? A jump in tax rate from 3.5% to 7%. So if you happen to fall within this level, and later on I will give you an illustration to show you how this is the case. If you fall into this level, you are the group of person that benefit the most from this taxation. And of course, anybody above this tax level also benefit a lot from this SRS scheme. So retiree is only taxed if SRS withdrawal exceed 40,000. So we're going to make use of some of this rule to show you an example. To start with, a simple withdrawal that a retiree make of 50,000. What would happen is that if you make a withdrawal of 50,000, out of this 50,000, 50%, only 25% is subject to tax. And if you take note of, the first 20,000 here is 0%, which means that only $5,000 is taxed at 2%. That is how the tax rate is computed. All right. Next, we take a look at someone with employment income of 90,000. And I'm going to give you a scenario where there is SRS and where the person choose not to contribute SRS. So the second column that you see here is the illustration without SRS. Now, I use a personal income relief of 31,500. The maximum relief that is possible is 80,000. I use this 31,500 to give an example where majority of the cases would fall within this level. There will be, of course, instances where you are a working woman and you have your husband serving national service relief, as well as you qualified for child relief, and all those various relief added up, you may just qualify for the maximum cap of 80,000. But otherwise, 31,500 would be a very realistic assumption here. And when you put in the SRS contribution, what you will notice here is that your taxable income would be, if you did not contribute, 58,500, and if you contribute, it will be 43,200. Now, you know the first 20,000, no tax, followed by the next 3 tier, and you see that there is a drastic difference in the total tax payable between these two scenarios. In one instance, the tax payable is $1,895. And in the other instance, if you choose to contribute to the SRS, is $774. So it does make a very big impact, $1,000 over of saving upfront for that year itself. And of course, as your income is more, you would still benefit from this tax relief that is afforded by the SRS contribution. And if you are a foreigner, of course, and your tax rate is high, you would even benefit even more. Next, I want to show you 2 examples of the tax implication if you were to make your withdrawal over different time period. So the first example I'm going to give is where you make a total withdrawal of 40,000 each year spread over 10 years. Also, I'm giving you this case an illustration of 400,000. And obviously, things may not be so nice, you know. Everything is 400,000. You could, by all means, accumulate more than this amount by then. But of course, I'm giving you a clear-cut understanding to see what are the tax implications involved. So if you were to spread your withdrawal out over 10 years, and each year you withdraw only 40,000, you can see that in this case, the taxable income, just nice, it falls into the portion where you do not have to pay any taxes at all, right? But however, in the second instance, same amount of money withdraw, but the timing changes. If I decide to withdraw over 5 years, we can never decide that we need only 40,000, right? Sometimes it depends on our lifestyle. If I choose to withdraw 80,000 over 5 years, the implication is that the taxable income in this case would be 50% of 80,000. Up to 20,000 again is not taxable, but the next 20,000 is taxable at the marginal tax rate over here. So the first 10,000 is 2%, followed by the next 10,000 at 3.5%. And what you have is $550 tax bill each year of the 5 years. And that round up to be $2,750 in total tax bill over those 5 years of withdrawal. So just to give you these two examples to show you what are the implications if you were to time your withdrawal differently. And of course, the whole idea is that if you were to time it in such a way that you pay the lowest tax, that will be ideal for your retirement, and that will be ideal for your spending needs as well. So that is kind of the last slide that I would share with you. Make sure that you follow us on Facebook, also on our SGX Invest Telegram channel. And of course, for those who are interested, we also have a SGX mobile app. So you can search for that in the App Store. For any of these investor resources that I talked about, you can head to this website and scan this QR code to head there. Join our Telegram channel, make use of our stocks screener, as well as explore many of the options that are available on the SGX website. We have come to the end of the SRS workshop. Thank you very much for coming. I hope to see you at a future workshop organized by the Singapore Exchange.